Good day. Welcome to Mergence Investment Managers. I am Kasief, Head of the Private Markets team at Mergence. With this presentation, I aim to share some knowledge gained from investing in Southern Africa via private market instruments. Mergence is an established asset manager with 17 years of investment experience. The firm was founded in Cape Town in 2004. We launched our first private market product, an impact-focused fund, in 2010. Making us pioneers in the Southern African region in impact and responsible investing. Total assets under management are close to $2.4 billion, of which the private market space represents close to $300 million. We have an in-country presence in South Africa, Namibia and Lesotho, and will be further expanding into the sub-Saharan African region over the next 2 to 3 years. Across our suite of private funds, we invest in equity with a bias towards infrastructure, as well as long-term and mezzanine debt. In this increasingly competitive market, it is important to be at the forefront of industry trends. Accordingly, we were an early adopter of ESG principles in our methodology, in line with the Mergence Group ethos of creating shared value. We were among the very first signatories to the Principles for Responsible Investing supported by the United Nations, as well as the Codes for Responsible Investing in South Africa. Creating shared value focuses on delivering both financial returns to investors as well as measurable, meaningful social impact. Our investment strategy focuses on high-priority themes that all deliver positive social impact, including economic and social infrastructure, clean power generation, digital infrastructure, affordable housing, student accommodation, and healthcare. Environmental sustainability is another key theme for us, where we invest in areas such as clean energy, waste recycling, as well as water management. The next area of focus for us is the agri-value chain, excluding primary farming. And finally, financial inclusion in Southern Africa. For example, one of our portfolio companies in Lesotho provides financing aimed at incremental housing. Contrary to developed countries, homeowners in smaller African markets prefer to fund incremental expansion to their homes as opposed to a conventional long-term mortgage. We were forerunners in the initial rounds of South Africa's acclaimed renewable energy independent power producer procurement program. We are currently invested in 16 renewable energy projects across both wind and solar within Southern Africa, providing funding across the capital structure, a mixture of direct equity, financing the previously disadvantaged shareholder in all three markets alongside ourselves, as well as senior debt. Alternative assets, particularly infrastructure, from a strategic asset allocation perspective, provides investors with portfolio diversification and returns that are uncorrelated to other asset classes. The asset class provides a hedge against inflation and continues to provide long-term, steady, risk-adjusted returns. To put some numbers to the returns, the Mergence Infrastructure and Development Equity Fund has delivered a return of 17% since inception in 2015, more than 5% above the fund's benchmark. That is on top of the quantifiable impact generated by the portfolio companies. The portfolio companies we have invested into supports close to 20,000 jobs. We summarize this impact in the annual Mergence Impact Report, which is available on our website. Switching now to lessons learned from investing in the region. Investing in Africa requires patience, perseverance, and a deep understanding and respect for all local laws and customs, the same as in anywhere else in the world. We found having staff or credible joint venture partners on the ground goes a long way to help mitigate some of the material risks and can be a source of competitive advantage. This is a far stronger proposition than a fly-in and fly-out or suitcase-style investment approach. The first key lesson learned from investing in Southern Africa over the last several years is navigating the legal and regulatory landscape. The reality is that legal frameworks are at different levels of maturity across the continent. Our preference is to issue a joint mandate to a South African firm, working closely with a corresponding firm in country. Another area we've had to adapt is around KYC, or Know Your Customer requirements. These will tend to differ from jurisdiction to jurisdiction. Working out how to verify someone when their birth record or proof of address is captured in a letter from the chief of their village was definitely an interesting process and a learning experience for us. Thirdly, depending on the maturity of the domestic market, you have to develop a market-specific approach to both portfolio construction and origination. In South Africa, for example, we focus more on transactions with contracted revenues. In Lesotho, as a direct response to the size of both the market and the size of the investable universe, we've added areas like financial inclusion and areas that are more export-oriented, where we can attract hard currency revenues. We have, for example, invested into a medicinal cannabis and aquaculture opportunity in country. Both of these are specifically focused on the export market and can deliver a huge positive impact for the country's GDP by locking in hard currency revenues. So the Africa opportunity is here, it's real, but it's not without risk. DFIs and other investors would be advised to work with managers that first invest in really understanding each market, can source consistent high quality deal flow and deploy capital responsibly. I will now outline a few of the exciting projects that we are invested in. Water is one of South Africa's worst hit resources. In South Africa itself, a water-scarce country, it is unconscionable to imagine that South African municipalities lose an estimated 35% of precious water before reaching the end users. These losses are caused by poor maintenance, illegal connections, decaying and lack of investment in water infrastructure, to name but a few of the challenges. As an institutional fund manager specializing in infrastructure and impact investing, Mergence is the only fund manager in South Africa to be invested in 2 long-term water concessions run by public-private partnerships. These partnerships are formed between the local municipality and the concessionaire, who is responsible for the supply, operations, repair and management of the water infrastructure, which the operator either procures from the local water board or obtains through the production of its own potable water. Mergence has a majority stake in both concessionaire companies and is actively involved in their management. These concessions are entrusted with delivering water to approximately 500,000 consumers in these 2 districts on a daily basis, including up to 40,000 citizens receiving free basic water from these concessions. In addition, there has been a marked improvement in both water quality and delivery to these communities. Switching now to digital infrastructure. Within this area, we have invested in 2 businesses focusing on connecting households and businesses at competitive rates. In a country like South Africa, with one of the highest Gini coefficients in the world, which has been further compounded by lockdown, millions of citizens do not have internet connectivity. Projects such as these will go a long way to addressing this problem and opening up connectivity to more citizens in South Africa. In Lesotho, we are invested in one of the continent's largest trout farming operations, sustaining 90 full-time jobs, with ambitions to double the number of jobs over the next few years. The farm currently supplies the domestic market, South Africa and Japan, and is actively pursuing entry into the US market. Let's now explore how we incorporate ESG and measure impact in our investment philosophy. Mergence have developed a detailed ESG management systems which details our requirements and obligations as they relate to the ESG expectations from our limited partners, ourselves as asset manager, our private market funds and our portfolio companies. The ESG management system details how Mergence incorporates ESG issues in the investment process with a view of mitigating overall portfolio risk, promoting sustainability and generating positive impact. It also spells out our ESG requirements from our investee companies. As a quick overview, the process starts at the screening stage with an initial ESG risk assessment. Any opportunity on the IFC exclusion list, for example, is automatically disqualified. During the DD stage, we set the ESG baseline for the assets and start defining how we will measure the impact that should be delivered from this investment opportunity. In both these activities, we are supported by external ESG consultants to ensure we always bring an independent third-party lens to this very important area of investment. Post-investment, we are in the process of implementing quarterly and annual ESG reporting obligations from our portfolio companies to both assess compliance with the Mergence ESG requirements and track how the companies perform against the baseline set during the due diligence process. In conclusion, Africa as a continent, and Southern Africa particularly, is an incredibly exciting place to be right now. There is a huge demand for infrastructure, both to keep pace with population growth and stimulate economies in desperate need of further growth. Yes, there are risks, but with the right partners on the ground, with the knowledge of the local markets, the opportunities to generate a very real ESG impact and deliver meaningful, robust, risk-adjusted returns to investors. We hope that you will join us on this journey into Africa's exciting future. Thank you.